All right, let's get right into it. Today, we're going to connect some of the most misunderstood concepts in trading, all with a single blueprint. So whatever you think you know, just set it aside for a few minutes. Let's dive in.
You don't need more setups. Seriously, let that sink in for a second. The answer isn't another strategy, another indicator, or another complicated setup. It's actually much, much simpler. What you really need is to see how all the pieces of the puzzle fit together. The real edge, the thing that makes a difference, comes from understanding the market's logical flow, that cause and effect that links everything.
And that's exactly what we're going to do today. I'm going to show you one framework that connects all those dots for you. And honestly, it might just change the way you look at a chart forever.
So, let's ask the big question. Why do so many of these trading concepts feel so disconnected, right? One day you're focused on liquidity, the next day it's all about order blocks, but none of it ever seems to line up consistently.
Well, here's the problem. Most of us learn these things as just a random checklist of tools. You see an order block, you jump in. You see a break of structure, and then you get confused when it immediately fails. It's because we're missing the sequence. We're missing the story that the market is actually trying to tell us.
Okay, so let's build this thing from the ground up, piece by piece. Step one, we've got to find the fuel. Think about it. Without fuel, a car isn't going anywhere. And for the market, that fuel, well, it all starts with liquidity. And let's be really clear about what liquidity is. It's not some abstract technical term. It is literally the gas in the tank that big institutions need to fill their huge orders. Price is just naturally drawn to these areas, almost like a magnet. So, where is this fuel? Well, it's hiding in plain sight. Just think about it for a second. Where does almost every retail trader put their stop losses? You got it. Right above equal highs, just below equal lows, and at those super obvious swing points. These spots become giant swimming pools of order. And this is the key mindset shift right here. You have to stop seeing these as just lines on a chart. They're not. They represent real human behavior. They are huge clusters of stop-loss orders and breakout trades, just sitting there, waiting to be filled. Okay, that's step one. Now let's move on to step two and build on that. So price has gone and collected all that fuel. Now what? Well, now we have to figure out if its intention is actually changing. And we do that by learning to read the market structure. You know that aggressive move you see when price smashes through a higher low? A lot of people see that and think, wow, what a strong trend. But it's not. That's a deliberate move called a liquidity sweep. The big players aren't trying to break out. They are simply collecting all those orders to fuel whatever they're planning to do next. All right, so right after that sweep happens, we're looking for our first clue. It's called a change of character, or CHOCH for short. The best way to think about this is like a warning flare being shot up into the sky. It's that first little subtle hint that maybe, just maybe, the momentum is starting to die down. It's a question, not a statement. The statement, the answer, comes next. And that's the break of structure, or BOS. This is the confirmation we're looking for. When you see a solid BOS happen after that choach, it's basically the market telling you, yep, that shift in intent is real. It's not a possibility anymore. It's happening. See how this is building? Only now, after we found the fuel and confirmed the market's intent, do we even start thinking about an entry. This is the final step, pinpointing the location. And this is when the famous order block finally matters. So what is an order block? It's really simple. It's just the last up candle before a big down move, or the last down candle before a big up move, specifically the one that broke the structure. The reason it's important is because it's like a footprint. It shows us where the big institutions were active, and it's a spot where they might want to defend their position later on. And this right here is probably the most important takeaway. An order block by itself means almost nothing. It's not a magic signal. Its real power, its probability, depends completely on those first two steps we just talked about. It has to be the final piece of the puzzle, never the first. And this brings us to the most critical difference, the big mindset shift. Understanding this proper sequence is the dividing line. It's what separates how a typical retail trader and an institutional trader can look at the exact same chart and see two completely different things. I mean, look at this. It's night and day. The retail mindset starts with the order block. They see it and think, okay, time to trade. The institutional mindset ends there. They do the work first, find the liquidity, wait for the shift in structure, and then, and only then,
Do they look at the order block as just a logical place for a potential reaction? And that single difference is why one group so often becomes the liquidity for the other.
So let's just put it all together in one simple flow. The sequence is actually beautiful in its simplicity. Step 1, liquidity. This tells you where price is probably going. Step 2, the sweep and structure shift. This tells you when the market's intent is actually changing. And step 3, the order block. This tells you where you can focus your attention for a potential entry. Where, when, and where to focus. It really is like doing a math problem. You know, PEMDAS, if you mess up the order of operations, you're going to get the wrong answer. Every single time. It's the same here. Once you start following this sequence, the chart stops feeling so random and starts to look, well, logical.
Look, if you forget everything else we talked about today, just remember this one thing. Burn it into your brain. Liquidity first, structure second, timing last.
Hey, if this little framework helped make things click for you, if it brought some clarity to the chaos, maybe consider subscribing to the channel. Because that's what we're all about here. We don't want to add more noise. We want to build frameworks that connect the dots so you can focus on what actually moves the market. Thanks so much for watching.